One of the things that we observe when there are stock market bubbles and crashes is that there are a lot of people behaving the same way. So I will start by motivating this topic. People take into account what others are doing. Okay, so there is a social dimension to risk taking. If you saw no one around you wearing a face mask, then you would take off your face mask and say, well, why bother? No one else is doing it, why should I? One of those in which this social influence is quite clear. If no one around you, among your peers, is wearing a face mask, is wearing a helmet, then you'll also be less likely. So I will start by motivating this topic. I will provide just a bit of a formal framework, but if you're afraid of maths, don't worry. It's only 2 slides. I will keep it simple and painless. So, that's all there's going to be. I'll then go on really to provide some evidence, and I will discuss implications of competitive preferences. And I may conclude just with a few words about study economics at UQ, but I will keep that very brief. Stock market bubbles and crashes. One of the things that we observe when there are stock market bubbles and crashes is that there are a lot of people behaving the same way. And there is at least some anecdotal evidence, and there have been various people who have claimed that, how you behave may follow what others do. So think of a stock market crash. Very often you've got a lot of individual investors in particular. They start selling, and you see others selling, and you sell as well. And indeed, a classical pattern is one in which individual investors sell, with the institutional investors buying things on the cheap and making a lot of money in the process. Now, there are many reasons why this may happen, but one possible reason I would contend is that in deciding how much to take a risk, how much to invest in this case, people take into account what others are doing. Okay, so there is a social dimension to risk taking. And this is the kind of lesson I will try to develop a bit further. Now, one perhaps clearer example of the social dimension to investing is in the GameStop bubble that started off about 3 years ago. GameStop is a US company which is basically worthless. It has been doing pretty badly for a long time. Its valuation on the New York Stock Exchange around the start of this period that you see here, so around, say, July 2020, was close to between $0 and $1, and that's pretty much what the fundamentals say. But then, you started having a bit of a movement in social media with people, there's been a movie about this actually, starting to invest in GameStop. And they started making money. And others saw that, and they say, well, I want to do even better. And they started investing as well. And this fueled itself. And it fueled itself until GameStop, the GameStop stock, got a valuation at its peak of over $80. That's over 80 times the fundamental value of the stock. I mean, needless to say, this couldn't really last forever, and it crashed, and lots of people lost all their savings in the process. But this would not have happened without a social dimension to risk-taking, in which very clearly people followed what others were doing. They wanted to do even better. They wanted to make even more money. And this has been done on and off more recently, although not quite according to the spike that we observed at the beginning. So that is an example in terms of if you want to risk taking. Now consider the COVID-19 pandemic. And at the time there was a decision that many of us had to take whether to wear a face mask or not. think of wearing a face mask in a pandemic as an insurance decision. If you wear a face mask, you are reducing your risk of taking the disease. And indeed, also others are benefiting from that because their risk of contracting disease is also lower. So what would traditional economics say in two cases? One is the case to the left, in which no one is wearing a face mask. And the other one is the case on the right, in which everyone is wearing a face mask. What traditional economics would tell you is that if you see everyone wearing a face mask, you should be less likely to wear a face mask because there is a lower risk of contracting disease, so why bother? But this is not actually what happens out there, what happened out there in the real world. If you saw no one around you wearing a face mask, then you would take off your face mask and say, well, why bother? No one else is doing it, why should I? Yeah? You wouldn't really want to be the odd one out in this context. So this is an example in which, again, you seem to take into account the others, their risk-taking, in this case, their insurance, right, in making your own decision. This is what this is all about. And there are plenty of other examples. Not wearing the helmet is a big, big issue and a cause of fatalities in India. Again, it's one of those in which the social influence is quite clear. If no one around you, among your peers, is wearing a helmet, then you'll also be less likely that you will be wearing a helmet yourself. Similar type of argument. There are plenty of other examples of this. So one of them relates to work culture. So you are getting employed in one of two companies. One is the blue company and the other one is the purple company. In the blue company, everyone is asleep at their desks. They're not really working very hard. The culture is one of not working very hard. In the purple company, everyone works hard at their desks. In which company do you think are you going to work harder? The purple company. That's right. The purple company. You see, everyone works hard. It makes you work harder. This is, by the way, also another reason why being in a college in which everyone else works hard, like Loyola College, is something that helps you because you see everyone else are working hard. This actually makes you work harder. You want to do at least as well as them in that level. Okay? So if you're in a high work environment, hard work environment, that will also make you work hard. Okay? Culture influences what you're doing right now.